Hey everyone, this is Ryan B with Practical Forex Trading. This is your US dollar versus gold weekly analysis. The week is January 26, 2020. So for gold versus the dollar, gold price, my sentiment is mixed, and I'll tell you why. So if we look at this uptrend, this goes back to this trend line alone back to 2005. We see this is very bullish, price breaking out above this resistance at 1350 in May of 2019. What we have though is kind of an event happening right now where price is pushing against this resistance at 1563 area. Let's call it R1 1560. Let's just say 1560 and 1575 because support and resistance is really more of a zone. Okay, so as you can see, the reason why this line is important is because going back to 2011, we saw price stay below it, then come back and land on it as support many times, right? This happened all the way through 2011, 2012, before finally in 2013, price broke below it. So what we saw was a couple weeks ago, price pierced through that, but then was rejected and brought back below. So I want to be cautious because previously when price tests this line, it falls away and then goes back and resumes. So will price fall back before continuing through resistance? I think is kind of my question as a trader. So let's go ahead and put a parallel trend channel here. That's like support and resistance over time. And you'll see this lines up nicely, right? Price stall below or above it, similar to our horizontal support resistance. So now let's go ahead and look at a different time frame. This is our daily. And we see, there we go. Okay, so we see price is pushing right on this zone. This last daily candle is very bullish, but price did not close above that. So what I really want to see as a trader is price make a sustained close above this 1575 area. If it does that, that's very bullish, and the bulls are on. So that's why I'm saying my sentiment is mixed. Because the other thing that could happen is we could see price go here first, dip back down to 1486 before continuing up. And a lot of times what we'll see price do is kind of range trade, right? So it's a range trade, but it's not a horizontal top and bottom. It's more of a, right? It's kind of like, just imagine if you were to have to color this in with a pencil. You would go bottom to top or top to bottom over and over and over again until this is filled in. And that's what we really see possibility. Like this happened here, right? Price action soared up into here, but didn't just keep going in a straight line. It scribbled around a bit, up and down, came back down, touched support, and really that's your better buy, right? You want to be careful buying at the top, because even though you may be right, maybe your analysis is right, you are correct, and price will eventually go through that line. A lot of times price can pull back, and then you may be holding on to something that you bought at 1575, worth $100 less for a few months until it builds back up. So just a cautionary tale. I'm not giving you investment advice. I'm just passing on some cautionary tales. Because really, when you think about entry points, when you think about our trades, we want to have the best entry point. If you have a great entry point, as soon as you open your position, you're going to be in profit. And that's going to feel real good. And that's going to build confidence in your trading skills. And then, if price were to flip around in reverse, it wouldn't be much of a loss. So great entry points are key. So here's another scenario that could happen. Price could come and wiggle around in here for the rest of the year between 1575 And the 14, what's this, 1480? Let's put some horizontal lines there. So you can see this is a support line right there. The other, so this is the mixed scenario, right? So that this is still very bullish. Just takes about a year to reveal itself. The other scenario that could happen is we see price move up again above this line, right? So if that happens, then we're gonna, then we're bullish, right? So this is the other trend channel happening. The question is, what's price going to do in this little wedge? Will it pop back out the bottom, or will it pop back through the top and stay above? At that point, we want to make sure it stays above this line. Then, so if price goes bullish above 1580 and stays above it, let's go ahead and zoom out. Then we could think about our next move towards our previous highs. So that would be 1790, which is price came back from 2011. So yeah, there you go. Those are our ascending channels. Really depends on what's going to happen right here in this wedge. We should see that resolve by the end of April, right? So this is either going to break through this week, because this weekly candle is super bullish. It could have happened this week, or price could rescind. So mixed on gold. This one's in a congestion wedge, so tread lightly and be very deliberate about your entries. Okay, everyone. If you want to stay up to date with all of our gold dollar videos, make sure you subscribe by clicking that subscribe button in the bottom right hand lower corner of your screen.